Hello everyone. Apple is an amazing company. They have a great ecosystem with MacBook, iPhone, AirPods, and their services which are all interconnected, making them an amazing business. However, they've had slowing growth and a really bad valuation in recent times. But if you do look over the last 5 years, they have outperformed both the S&P 500 and Nasdaq, which is very impressive as it's very difficult to find companies which are able to do this. And if we look at the last 1 year, they have underperformed as they're down by about 8% compared to the Nasdaq and S&P's 11%. There is a good reason for this, as I do believe that people are starting to see that Apple is overvalued and the issues that Apple is having, which is making people sell Apple and are more afraid to buy into this company. When looking at valuation, Apple has been cheap historically. They were at the 10 PE, they were at the 13 PE, they were at the 15 PE for the early part of the 2010s and the even into 2018. However, after COVID, after the 2022 crash, and especially recently in the AI boom, they have been they have had a pretty heavy valuation, around 30 to even close to 40. And this is a really big issue for Apple as they do have multiple slowing businesses like the iPhone business, which we'll look into later. And this can also be quantified through their earnings per share, which has been stuck around $6 per share or less 4 years. To further exemplify this, we also can look at their sales, which have been growing much more consistently than their earnings, but have also tapered off recently. And their their price to sales ratio has also increased really heavily to nearly 10, where at one point they were at all the way at 2, which is nearly 5 times more, which makes it nearly 5 times more expensive than it used to be. And this is a really big issue when you start looking at Apple's forecasted growth. Apple's also being valued like it's growing as it used to be, which is clearly not, as their iPhone business has significantly slowed down and their earnings have too. And their forecasted earnings, which right now is which in 2024 was $6.75 per share, is expected to grow all the way to $8.70 per share, which is pretty good. However, this would be pretty difficult for Apple to reach, as recently they have had some issues with the iPhone, and looking forward, they are only really relying on the services. This can be further seen by their source and breakdown of the revenue, where about over 50% of the revenue comes from iPhones, and around another 25% comes from other hardware-based accessories like iPad, Mac, and like the Apple Watch and other stuff like that. Their services only take about 25%. And when you look at the growth of these businesses, when removing services, Apple has been very slow in growth, as they've been kind of stagnant below $320 billion over the last 6 years. And when you remove all of these hardware-based revenue sources and you just put in services, they have been growing very consistently and at a really aggressive rate. If this was all of Apple's business and this encompassed all of the revenue which they have right now, this would be an amazing business to invest into, as this is amazing consistency and has been an amazing driver for Apple's business over the last recent years. According to Morningstar, Apple is slowing down, and their Apple Intelligence and their AI story is not really helping their business at all in a real financial way. Morningstar also believes that the iPhone revenue will continue to slow down to about 5% annual growth till to 2029. This is really bad for a company with 50% of their business in iPhones. And this slowdown could also mean that Apple will likely have a valuation turnaround where they go from a 30 PE to maybe a 20 PE, because people are starting to realize that this company is overvalued and the growth rate isn't the same as it used to be. There's many different companies I recommend over Apple right now. You can see many of them maybe in my channel, but one that I want to point out here as an example is Nvidia, which although it's been on a great run over the last several years, their price to earnings ratio has actually declined from their 2021 highs, even lows in 2021, and now they're lingering around the 35 to 50 PE. And during the April stock market crash, they're all the way at 35, which is really close to what Apple has been at recently. The big difference between Nvidia and Apple is that Nvidia has an AI story, which actually works, and they also have earnings per share, which is growing at an immense rate compared to Apple, from 17 cents per share in 2023 all the way to a $3.10 per share in 2025. This can be further seen to their price to sales, as their sales have also increased heavily, showing consistency in their growth, and their price to sales ratio, although really high, has not increased from their 2021 highs, which is really impressive because their AI story has gotten much stronger. They have many more people who are willing to invest, but they have grown in quality of their business, which is really important for the price to increase and for a good time to buy the company. Nvidia, on top of this current growth, to support this, their future forecasted growth is also much better. As Apple is barely even increasing by 60%, Nvidia is expected to more than just double over the next four years. And this can be really important when looking at a company's future and whether this is the right time to buy when we're trying to compete against the market. So that is all I have to say here today. I believe that Apple is a great business. They have great fundamentals. They have an amazing ecosystem. However, they are overvalued. They're no longer growing as what they used to be, but they're still being valued the same. And for that reason, I would say there's better buys right now, and I would not recommend Apple as a good investment for a long-term hold.